Good evening and welcome to the Phoenixville Area School District Finance and Personnel Committee meeting for Monday, May 4th. Our first order of business is the approval of minutes from our last meeting on April the 7th. Anybody have any questions or thoughts? No? Next is our personnel report, which will be up for approval later this evening. We have a resignation from Ms. Betsy Ellinger. We've got a couple of support staff appointments. Looks like we're adding a handful of assistant coaches and head coaches throughout the district, some summer program staff, as well as our another list of about a dozen or so volunteers. So those will be up for approval later this evening. Oh, in addition to some transfers, I apologize, inter-school transfers. Any questions or thoughts on that before? I don't know if Ms. Rockwood's here. Okay. Now we have a couple presentation items. Dr. Melver, I think we've got one of these actually is up for approval this evening, correct, on the solar RFP?
Yes, but we also have Bob Kaufman from Clifton Larson Allen, our independent auditing firm. I'm going to let him actually skip ahead and go first.
How could I forget the audit, of course.
See my clicker, we good?
Good evening. Thank you, everybody, for having me back this year to present the audit. My name is Bob Kaufman. I'm with CLA, Clifton Larson Allen. The local government practice from Witham was purchased by CLA on July 1st, hence the change in the audit firm this year. On the agenda for tonight, we are going to go through the audit scope and process, the audit opinions and required communications of the audit process itself, some financial statement highlights, and the engagement finalization process. So the scope of the audit encompasses the report on the financial statements, which is where the audit opinion is encompassed, report on internal controls, a report on the internal control over compliance due to the single audit as a result of receiving more than $750,000 from the federal government, which is passed through the state, most of the funds, and required governance communication via a letter. So the audit process at CLA and many audit firms are a risk-based audit approach. What we do is we evaluate the internal controls, identify some significant risks in the audit process, which the risks that were identified were two standard risks that pretty much apply almost anywhere. Management's ability to override the internal control process. If two people are colluding, there's always a risk that could happen. Not much that you can do about it unless you somehow identify that collusion occurring, as well as management's ability to improperly recognize revenue and inflate the district's fund balance. Very kind of low risk, as there's not really an incentive to do that, but it is a standard risk across audits. Through our evaluation, we tested internal controls, looked at significant estimates, and then tested some key material audit areas to generate our opinion. So on the next slide, you'll see that our audit opinions issued in the current year over the financial statements and the federal awards, the single audit, is unmodified, also known as a clean opinion, the best opinion that you can get through the audit process. And during our internal controls testing, our sampling did not identify any internal control issues over financial reporting or on the compliance related to the federal grants. The required government communications are listed, some of them are listed here. Like I said, there will be an official letter at the end of the process. But a couple of things to note is GASME Statement 101 was implemented this year. It's over compensated absences, and we'll go about a little bit more detail on the next slide. But I wanted to note that there were no difficulties encountered during the audit, and there were no significant matters discussed with management through the process. So we did not identify anything that would result in a required communication. So GASB 101 this year, compensated absences, resulted in a restatement of beginning net position on the entity-wide statements. Essentially, the standard says, hey, not only do you have to say how much you are liable to pay out in retirement as of the end of the year, but also how likely your employees are to use the balances that they currently have. And that's multiplied by their daily rate. So it resulted in a restatement due to the standard, a change in accounting principle, which significantly increased the district's liability in the current year on the government-wide position. So not fund balance, but the side where we show the long-term assets and the long-term liabilities. So where this really applies is if, a teacher or another employee went on FMLA and had to use a significant leave balance, the expense is recognized in the year that they actually earned that leave balance compared to, when the long-term sub comes in and you incur that double expense for paying them while they're out, as well as a substitute. GASB 102 was also implemented this year. It did not have an impact on the district. You would mostly see this if, a local government has like a tourism tax and, the pandemic happens and you can no longer have tourism and it significantly impacted your revenue. That would be something that GASB 102 would require you to disclose in your financials. So there were no risk items that were known and likely to happen that would be required to be reported on the district's financials. So the next section is the financial statement highlights. We'll go over to the budget to actual general fund, fund balance composition, governmental funds, and the food service fund. So the first slide we have is the budget to actual. As you can see, local revenues were approximately $4.3 million above budget, and this is due to better collections for current and interim real estate taxes, as well as better interest and investment earnings than anticipated. State revenue is about $1.2 million as a result of the district having to pass their budget prior to the state passing their budget, so the exact subsidy amounts were unknown at the time. Expenditures, approximately $860,000 more to budget, mostly due to the unbudgeted federal dollars. It's a net zero. Federal revenues and expenditures always have to match. For the grants that the district receives, at least most of them. And then other financing sources, there was a variance due to a larger than anticipated transfer to the capital reserve. In the governmental funds, we went through the general fund already, so the major difference here, especially compared to prior years, was there was a spend down this year for the Harris Hill Elementary School construction project. So as you can see, the majority of the fund balance was spent down by year end. The next slide, the fund balance composition, comparable to last year. The $9.5 million in unassigned fund balance is within the state's maximum of 8% of the next period's expenditure budget. So the district is in compliance with that. On the next slide, you'll see the food service, broad overview of both the balance sheet and the statement of operations. A change in net position of about $225,000. So as you can see, the food service program has been self-sufficient, both last year when it presented and this year again. So next steps, the audit is going through the final reviews and formatting. We don't anticipate anything changing, not major. I don't know if I mentioned, but CLA is one of the largest governmental auditors, so they kind of get into detail. They might say, hey, you need to add an additional table to give a little bit more information here, but we don't anticipate the overall numbers changing. If for any reason anything were to change, I could provide a memo or present at the board meeting before a vote were to occur. And then once we have the final draft copy for approval, we would send a representation to Dr. Melber to ensure, which basically just says that the information provided to us was not manipulated, not fraudulent. The basis of us providing an opinion was based on solid data. So that concludes my presentation for tonight. Does anybody have any questions?
I do. Can you go back to that GASB 101 compensated absences?
Sure, no problem.
Explain to me again what that means.
So the oversight body that determines the accounting policies made a change to compensated absences, which used to mostly be what you anticipated would be paid out in the future for on retirement, or if you paid out vacation, no matter what, when anybody left, you would accrue that amount, and that was the district's liability. The 101 standard now takes more of a, instead of what your liability is, hey, we want to recognize the expense in the year that those leave balances were accrued and earned. So it made you consider how likely people were to use those balances in addition to how likely they were to be paid out. So the usage is where we're seeing a lot of those liability increases because the expense for those usages should have been recognized in years past when those balances were being earned. So items like long-term leaves of FMLA or anything where you would use a significant portion of your sick balances are being recognized in prior periods or the year where you earned that leave instead of in the year where those are taken, so that if you have to have a substitute cost or bring in a contractor to fill that significant role, you're not doubling up on the expense in that year.
Okay, so if I'm understanding what you're telling me, this year we had to recognize more liability because we were recognizing all the leave that's been accrued but not paid out yet?
Essentially, yes. So there is an estimate that we're, yeah, yeah. I'm trying to. It's not. I don't love the standard either because it's really an estimate. It's very heavily an estimate, and determining the key language is more likely than not. So how much of the balances are more likely than not to be used versus lost or versus paid out.
Okay, so bottom line, what does this mean for our financial statements?
It sort of means if everybody decided to retire or resign today, every employee in the district, this is what the district would be liable for. Obviously, a scenario most likely not going to happen.
So does this impact we're going out to get a loan and like these are, okay.
No, so all standards changes are always factored into whenever the S&P or Moody's or whoever is evaluating and doing your credit rating. They're always taken into consideration when that change occurs. And on the financial statements, it's clearly stated, like, in the restatement, how much the implementation of the standard affected the district. So in that year where the change is occurring, those credit agencies can see, okay, this standard impacted the district by $4.2 million. So if we compare it to the prior year, we know that we have to adjust it by that amount in our evaluation.
Okay, good enough, thank you.
Mm-hmm.
Could you go to slide 11, I think at the governmental funds? So just if I understood you correctly, that nearly $45 million deficiency, right, under the CAP project, that's attributed almost entirely to finishing the Harris Hill project? Is that a fair assessment?
Yes, I believe it's 41 million. There's some miscellaneous items for leases and right-to-use arrangements, software technology that the district is required to recognize both a revenue and expense that net to zero.
Net to zero, okay.
Just one of those standards where you have to impact the fund level in order to get it onto the long-term side. So it's a net zero impact. So if you look at the bottom portion where it says net change in fund balance, that's more of the true impact, and most of that is related to the Harris Hill construction project.
Okay. Thank you. Any other questions? No? Thank you very much.
Thank you for having me.
Appreciate it. Have a good night. Next on the agenda, Dr. Melber, we have the solar projects for Manavon and Schuylkill.
Yeah, so back in May 2025, we came to the board with a proposal and a feasibility study that was done by the PA Solar Center as we had received 2 solar grants to put solar on the buildings at Schuylkill Elementary and Manavon Elementary. We needed to do that feasibility study in order to apply for the grants. We were awarded the grants. We were awarded $300,000 at each of the buildings. We then went through a long, tedious process of how do we bid this out. As you'll remember, one of the larger parts of this project was going to be the reimbursement we were receiving from the Inflation Act of 2022. To say that a wrench got thrown into this is an understatement. Multiple toolboxes got thrown into this process. We all know what happened in January of 2025. A new administration came in. The Inflation Reduction Act was supposed to sunset in 2032. The new administration decided to sunset in 2026. So that sort of put us in high gear. In order to receive that 40% reimbursement, we had to have all of these contracts done, RFP out, bid signed, contract signed, and 10% of the invoices paid before July 4th, 2026. So we're coming up on that deadline. We sort of went through a process of how we're going to get this out for bid in time to have everything submitted. In order to do that, our solicitor's office came up and said that going through a GISA project, which is a Guaranteed Energy Savings Act contract, would be the fastest way to do this. We did that. Bids were received on April 21st. Can I run that from this? So if you remember, these are the May 2025 estimates. We were awarded $300,000 for Schuylkill Elementary. We were looking at the upfront costs for that pricing to be $1,193,000. The incentives between the grants, PICO credits, and the Inflation Reduction Act was going to be $848,000. So our net cost for that system was $345,000. Looking at Manavon, our upfront cost was $2 million. Our incentives were going to be $1.2 million. So our net system cost was, we were looking at $790,000. So all of that together, we were looking at total costs to turn both of these campus 100% solar. It was estimated to be at $3,194,000. We had $600,000 in grant funding from PDE. Our total IRA credits were estimated at $1,257,000. We were estimating PICO rebates at $201,000. So that would be total cost to the district of $1,135,000. The board at that point said, go ahead with this project. Of course, then throughout the year, again, we all know what happened January 2025. Legislation changed, tariffs were put into place, costs went up. So in April 21st, a couple weeks ago, we had our bid opening. The district received 5 bids from 5 solar companies. District officials, our solicitor's office, and our consultant, the PA Solar Center, reviewed all those bids, and the lowest bidder was reviewed and selected. The lowest bidder was the McClure Company out of Harrisburg. Their lowest bid was, lowest qualified bid, which was actually also our lowest bid, was at $4,011,918. Now that was obviously significantly higher than what we thought a year ago. A lot of reasons can be explained to those rising costs. Sort of looking at what they were doing. Why is this showing?
I didn't know. Same thing, it is bizarre, yes.
Yeah, that's good. That's good. Nope. Yeah, we're good. One of the changes in it is when we were looking at doing full mounts on Manavon, full mounts on Schuylkill, and then we were doing 2 ground arrays at Schuylkill. The left side one showing there was going to be the ground array from Manavon, doing a net metering service, and then on the other side was going to be the ground array to finish off Schuylkill. McClure thinks that they can put full ground arrays on the one side and not have to touch the other side, and we can get full net metering services to Schuylkill and Manavon, that doing that one ground array with both roofs will get both of those buildings at 100% solar. When we were doing the projections, we were looking at the 40% cost reduction. Part of that was 30% meeting the requirements, and then there was an extra 10% for an economic community. Economic communities is a map drawn out by the Development of Community and Economic Development that sort of shows what communities were within coal firing plants. These 2 campuses actually qualify for that 10%, so that's why we were looking at an extra 40% reimbursement from the IRA. There's an additional 10% reimbursement for domestic credits. That basically means, domestic content. That means if a percentage of these solar systems were built in America, you get an extra 10%. Back in May 2025, sort of said, no way that's going to happen. None of the solar companies would come up to that. A year later, as tariffs have impeded foreign importing, solar companies really ramped up their production in the USA. The costs are higher, but because of that, now the solar companies that submitted a bid feel that we would qualify. So it is higher cost, but we're looking at a 50% reimbursement. So looking at that at the top, the total project cost was bid at $4,011,000. We're looking at $600,000 in our Solar for Schools grant. We're looking at $1.773 million in the investment tax credit. We think that's low. McClure had said that not everything will qualify for the credit. They're estimating it at 90. That's a conservative estimate. It's probably going to be somewhere around 95%. So there's probably an extra $150,000 to $200,000 that we won't know until we actually build and qualify for it. And then a $196,000 rebate is from PICO credits. So this brings the net project cost for the district to $1,441,000. Now that is $306,000 higher than we had initially thought, but looking at the IRA credits, we only have about a month and a half left in order to qualify for this. So looking at the estimates versus what the project bid was, we were estimating 1.135. We're looking now at 1.441. Again, we think that number, while that number is $306,000 higher than we were looking at a year ago, again, there's probably $150,000 to $200,000 additional IRA credits if we qualify. So that number is actually probably more in the line of $100,000 to $150,000 more than we had originally thought. The district did allocate $2.5 million of our fund balance last year to solar projects. When we allocated that amount, what we were looking at doing was these two projects, and we also want to finish off Hares Hill. Hares Hill is right now operating at about 40% solar. We want to get all of our project permits closed out and then look at putting a ground array over there. So we were looking at possibly the remainder of that funds. With this project, even at $306,000 higher, we're still within our range to do that. Again, this is all being done under the safe harbor clause. With the IRA sunsetting July 4th, what that means is you have to be under contract, you have to have signed contracts, and you have to have 10% of the invoices for the project paid for by July 4th, 2026. So what we need to do is approve this tonight. We had to allow for 10 days we had allowed 10 days between when we announced the award of the bid to when the board can vote. We did that 10 days ago today. And then once the board approves it, the solar contractor normally has 60 days to make recommendations. We've all agreed with all the solar contractors that bid that if we approve this, is 30 days enough? They've all said yes. That would bring us enough time to get this all done that we could receive the IRA credits. If we don't do that and we lose the IRA credits, it's $2 million. If the board would want to continue, it's an additional $2 million. So our next steps would be to approve the recommendation tonight to award the bid and contract. The developer then has 30 days to review and sign the contract. We've been in constant communication since 10 days ago with McClure. Our solicitor's office is having another conference with them tomorrow, and we're meeting with them on Thursday. They are full game on this and think we can meet these timelines and want us to meet the timelines. Then in early June, the contract would be signed by both parties, and then before July 4th, the developer would invoice us for 10% of the project to meet that safe harbor clause, which would be reimbursed by the state. 10% would be about $400,000. The state is telling us as soon as any invoices are received, send it to them, and they will get us a check up to the $600,000 we're award. So everybody's sort of on the same page. So we just need to move somewhat fast. The one caveat to this, after having conversations over the weekend with our solicitor's office, is you will see in the motion, it does say total cost for both projects combined not to exceed $4,464,000. That is higher than the $4,011,000. The reason for that is if something would come back over the next 30 days, that something would come up and McClure would say, well, you know what, there's issues with the land development over there. It's actually going to cost you $150,000 more. We would have to restart this whole process, which would mean we have to start the 10 days again. We would need the board to approve it, give 30 days before we can award the contract. We're then out of time, and we lose the $2 million in IRA. The $4.4 million million was the second lowest bidder. So if something would happen, McClure would come back and say, there's no way we can do this, and we would have had to have gone with the second highest bidder, it would have been $4.4 million. We're talking to McClure. They're very eager to win this project. The solicitor's office, out of caution, said, let's put in the next highest bid amount, because if we don't, and McClure comes back to something needs to be done, game over for this project. So that is why that number is in there. It's actually the second lowest bid, which we would need to go to anyway if McClure said they couldn't do this project.
So as a follow-up, thank you for that. As a follow-up to that, is the second bidder engaged at all as a contingency? I mean, do they know that in an emergency situation?
It's just no, because if McClure can't do it, we're out of time. We can't even come back to the second bidder and do it.
So that's really a cushion for McClure contingencies.
It is. A cushion for us and McClure, yes. But they are committed. We've had numerous talks with them.
Sure.
They are committed to the $4,011,000.
Add one more, but go ahead. Yeah. If you just pop back to slide 8, the payback slide, yes. The payback period, so that one right there. Could you shed some light on SREC revenues?
SRECs, yes. So SRECs are solar renewable energy certificates. And what they are is utility companies are required to purchase SRECs from solar companies or anybody basically has such solar that produces solar can sell a SREC back to a utility company. They're required by law to buy them. They're performance-based incentives. One SREC equals 1,000 kilowatt of hours produced. So every kilowatt hour that your solar panels produce, you can sell an SREC to a utility company. They're bought on an open market. There are brokers that you basically go to market. You put these up for sale. Utility companies are required by state law to sell them to you. And I did sort of skip over this slide. So the payback, even at the $1.4 million, at 10 years, that money is paid back. And over a 20-year savings, it's $3.2 million in savings to the district. We did stop at year 10 on the SRECs. Most likely that will continue, but you never know where state legislation is going in 10 years. For comparable purposes for all solar companies, we did put in the bid, submit what your SREC estimates would be for the first 10 years, and that's why it stops after 10 years. Most likely it won't. We'll continue to sell them after 10 years.
Does anyone have any other questions for me?
Just a couple. First off, I really appreciate all the work. I know that this is, we're sprinting towards the finish here, so, which is great. In this bid on the ground array for, that's combining the two, is there security fencing in that bid, or is that an additional thing?
There's no security fencing in the bid. If that's something that we would want to look into after it's installed, that would have to be something we would look into an additional.
Okay. And on Harris Hill, remind me, we were looking at a courtyard array as well as a ground array that was outside the building. Are we still looking at both of those?
We are. We wanted to get a full year of the solar panels that are on the roof to see exactly how many kilowatts they're producing. We're still running at about 40% of that usage. So we'll have to determine once we look into that, once all the permits and the ground permits are closed out, what we can do over there based on space and design, what type we would need in order to get that building to 100%, which is required by 2035.
Okay, that's all.
Does anyone else have any other questions? Ms. Turner.
On this same slide, can you talk to me about how you are calculating that energy savings? Or did you come up with like some standard price per kilowatt hour?
No, we looked at the averages of what we've been spending on electricity at both of those buildings the last 2 years, and the solar companies ran interval data usage reports to see what those buildings need and produce. We've looked at what our contract is next year, and then I believe they used 5 or 6% multipliers every year after that, and that's how those savings were accrued.
Thank you.
Anyone else have any other questions? Thank you, Dr. Melber. So this contract with McClure Watch should be, as we mentioned, be a roll call item this evening on this evening's voting agenda for a vote tonight. Approval items for our next voting meeting on the 18th. I don't know, Dr. Melber, if you want to take us through these.
Sure. It's we have the Treasurer's Report for March 2026. We have the bills list for 2026. We have approval of the $1 million transfer for general fund to capital reserve. This is to pay for including the tennis courts and any summer plans coming up on the SLEP. We have approval of Aramark Educational Services as the district's food service management company for next year. As you all know, PDE requires a school district to bid this out every 5 years. We're at our 5th year. We did bid it out. We only received 2 bids. There was a committee of 4 people that all scored the bids independently. Those bids were then sent to PDE, who then returns us their answer on who we can hire. That bid, scoring did come back to renew Aramark for the 2026-2027 school year. We have approval of the 24-25 fiscal year audit, which was just presented. We have an appointment as me as the director of the school nutrition programs. This is a PDE requirement. Typically in the past, this has been the food service management company, whoever their director was, they would hold this position. 2 years ago, PDE says it can't be that. It needs to be a employee of the school district. As the food service department falls under my office, tag you're it. So now after 8 hours of ServPro training, I can tell you how often and how to recalibrate thermostats and what the proper cooling temperature is for the travel of foods.
And what is that temperature?
I'm sorry?
And what is that temperature?
42 degrees.
Excellent.
And you should recalibrate your thermostats.
Celsius
almost
or
every day.
Fahrenheit?
Fahrenheit. I do not know the Celsius conversion. But you should recalibrate your thermostats every year. And mine in my kitchen, which I probably dropped 4 times a week, has not been 3 years. So now I know why my chicken's never hot enough. So that's just an appointment that we have on tonight in order to meet those guidelines. And then nomination appointment of the board treasurer for 2026 through 2027.
Thank you. Does anyone have any questions on those items for next meeting? Moving on to informational items, just have our monthly bank statements. Anything of note there, Dr. Melber? Anyone have any questions? Okay. With that recognition of visitors, we have Miss Lisa Longo. Hi.
Thank you again. I'm going to start at the end, which is the nomination of a board treasurer. And I'm sure Dr. Melber's doing a great job. But as the person responsible for preparing the financial statements, there should be an oversight. That was why a board member was always the treasurer. I looked at every bank statement. I looked at every financial statement. I wasn't even the treasurer. I was just a regular board member. But I really hope the board will consider that. I think it's a super important, especially given what we've been through in the past in this district, right? So a board member, it is more work. I'm not going to lie to you, an extra couple hours, maybe a week. So it's not easy. But I do really hope you'll consider that. With regard to the solar program, well done and congratulations. I mean, this is super exciting. My one question is the roof on each of the buildings, when were they last replaced? So if you're putting up a solar array, you don't want to have to replace your roof in 5, 7, or even 10 years. When I did my solar at my house, I put on a 30-year roof before I did my solar. So does anyone know the answer to that?
Yes, Schuylkill was put on about 6 months ago, and Manavon was put on when it was built in, I believe it was 2017.
Yeah. Okay, great. With regard to the food service, this is kind of an oddball thing, but again, when we were here, we made sure that every cafeteria had pitchers of water. Students should not have to buy water, and they shouldn't have to leave the cafeteria. Sometimes they're not even allowed to, was my understanding. So I don't know if that's still happening, but it is something that the board, as a policy, can make sure is happening. Also, we made sure there was more fresh fruit. There was an extra cost. We wrote that into the contract. We wanted to make sure. One of the things we did was we got an orange slicer and an apple slicer. Can't hand a kid an orange. They throw them away for some reason. But if you slice it and hand them a sliced orange, they will eat it. So little things I learned through 15 years doing this. And then the last thing I wanted to ask about, and this will come up in the budget discussion, but what is our IDEA deficit? So, little known fact, when Congress approved the IDEA back in 1970, we were promised 40%. We've never gotten more than 20. What are we getting now, 17?
I wouldn't even say that high. I would probably venture 9 or 10.
Wow. So it's gone down. So this is super important when you look at your budget, because that is a deficit, and that is something we need to go to Congress. There is a bill right now, fully fund the IDEA, but taxpayers deserve to know that their property taxes are going up because of a failure to fund by the state and federal government. This isn't on you guys. When I was here, that deficit was $4 million. It sounds like it could be triple. I don't know, but I'm using some round math. So I would hope that one of the things you can look at in this process is what is that number, and it is certainly something we should all be discussing. Thank you.
Thank you, Ms. Longo. No more visitors? Okay. With that, we'll adjourn the meeting at 6:23. The next Finance and Personnel Committee will be on June the 1st. Thank you.
All right, we will start our voting meeting at 6:30. If there's anybody here who would like to participate in public comment, I would encourage you to sign in at the bar over there. Thank you.